Thanks very much, Paul. Ladies and gentlemen, Kerry, I can only assume you've saved the best to last. Breaker listed in 2012 with a specific objective of finding large new gold systems in Australia's eastern goldfields. This is what a major greenfields discovery looks like. Prior to finding this, we'd spent several years exploring areas of deep cover and highlighting to us sort of certain aspects of geochemistry which aren't in the literature, which are subject of a separate talk. So I'll move on. The Lake Road project is extensively de-risked by 160,000 metres, which has outlined an excellent resource, and the potential is wide open. The open pit resource that you can see there of 1.1 million ounces can be mined at 1.4 grams, can be mined at 2 grams, can be mined at 3 grams. Obviously the ounces drop in each case, but the important point is we have that optionality. What makes the most profit in an open pit resource is something between 1.5 and 2 grams. So that's the reason for the grade you see there. Other key point, this is a high-grade deposit, and as such will go, after the open pitting, will go underground. It is an interim resource that is limited purely by the extent of the drilling, which extends to a variable 150 to 250 metres below surface. We've got 3 to 4 rigs out there, and they've been going there for the last year and a half, and they're not going anywhere. The reason for that is in the last 5 months, we've added 500,000 ounces at a cost of $11 per ounce. It pays for us to drill, and we're going to keep drilling. Both for more shallow ounces, and we'll start to outline the deeper ounces. While that's happening, a PFS is in progress. That is scoping the potential and the economics and looking for an early startup for a large standalone open pit development. A high margin mine is what we're targeting. Our confidence in this going underground is highlighted by the last bullet. The company is run by an experienced team of mining industry professionals who've been around for a while, have had good success and are well regarded. We own, at this point, 18% of the company. We are strongly aligned to shareholders. We don't like issuing shares, and that's reflected in the tight capital structure. Our market cap is currently 47. Tomorrow I expect it to be 57 when we issue the shares that Paul Carter was alluding to. We are well cashed up. About 3 weeks ago, we put out a resource that the market was anticipating in April. The share price has started to recover, but not yet. It is a golden time to get involved. And this is why. We plan to take our ounces, which the market is currently valuing at $42, and push them up the development and mining slope that you see there. So we'll be adding value to those ounces by demonstrating mineability, and in the meantime, adding ounces at the same time. This is simply to give you some perspective. Discoveries like this are extremely rare. Liam Twigger alluded earlier that smaller companies should perhaps lower their sights and look for something smaller. Well, I'd argue if you're using geochemistry as a tool, you look for big targets. That's what we're looking for, and that's what I believe we've found here. 6 discoveries in Western Australia in the last 15 years. The top 3 are greenfields discoveries. What's important here is that all those companies, with the exception of Breaker, are very large companies. We're not large yet. The other interesting aspect is that we're going to be going underground in the long term. Not all discoveries, as you can see there, go underground. This slide highlights the RC and diamond drilling that we've undertaken over the first 8 kilometres of what is a 550 square kilometre footprint. It is just the start. We're drilling out the initial air core anomaly. You can see our drilling is focused in the middle in a 2.2 kilometre zone, and the intention there is to work up a resource that we can monetise while the drilling continues, because as I said, we're going to be drilling this for many years. Why are we so confident that this will be mined? Well, open pit optimisations done 500,000 ounces ago were demonstrating a single open pit, 2 kilometres long, extending down to up to 200 metres deep. This pit, potential pit, call it what you will, is getting wider, it's getting longer, it's getting deeper. And that is why we haven't put a timing on the PFS. No point finalising that while the goalpost is still shifting. The drilling that you can see along strike from the main discovery zone, there are many significant intersections there that have simply not been followed up. The most recent area, 2 kilometres north, we hit 11 metres at 3.8 grams 1 metre from surface. This thing will continue to grow. The drilling that we've done has outlined continuity that my colleague Mike Outhwaite will show you through shortly. What we're seeing is 5,000 to 6,000 ounces per vertical metre. That underpins the mining potential going forward. We're also seeing positive metallurgy. A key message from this talk is minimal downside risk based on that de-risking and very extensive multiples on the potential upside. We are still discovering lodes in that central zone 18 months after resource drilling. We step out, we find more lodes. So our focus is on ongoing resource growth and advancing that camp scale potential and developing that early development opportunity. At this point, I'd like to introduce you to an outstanding geologist, structural geologist, Michael Outhwaite, who was instrumental in discovering this thing.
Thanks, Tom. So Bombora, the Bombora deposit's composed of multiple mineralised lodes in a couple of different orientations, which you see there. And because that's difficult to display for us in 2D, we've had a 4-minute fly-through here, which comes in from the regional scale. So as Tom mentioned, where Breaker has floated to find new systems, we went looking for a new gold field or a new camp, if you like, in 2014. Based on some key structural criteria, identified the Lake Roe areas having some key ingredients of big deposits. There was nothing within 35 k's of it in any direction at the time we pegged that central tenement where Bombora is, so no mines or resources. The reason this is important for us is it kind of underpins our confidence in Bombora, the deposit, to keep on delivering, because we know the geology fundamentals are top class, and we expect the project as a whole to keep going, given that we think it's a new gold field. So this is the Bombora Sill, which is the key host rock, an 8 kilometre long air core anomaly at end of hole, which we defined very early on and have zoomed in and spent most of the last 2 years just drilling that central zone there, which is what we call Bombora. So only a thin lake cover there in the middle. This is the quartz dolerite host rock, which is the favourable host, and multiple mineralised lodes within that. To kind of simplify the picture, this will go into cross-section soon onto a couple of the key lodes. There's a sub-vertical one there in magenta called Chura, which is in the red shape, kind of sticking out from the yellow. And that structure actually cuts right down through the dolerite. These flat-lying reefs here cut straight through the dolerite as well, and it's where they intersect that yellow unit that is where we target. That's where most of the gold drops out. This will turn into 3D soon, so this is really hard-won geology knowledge from a pure greenfields discovery, and this is what allowed us to add 100,000 ounces a month in the last 5 months, now that we understand this really well. So the result of all this is a series of plunging lodes in different orientations. So we're seeing now two of the key steep lodes, Chura and Mindel, and 5 or so of the key flat reefs there, which are all named. And they give us different plunges within the system. You can see there's a lot of gold outside of those, but these are just key ones to illustrate the geometry. These are some intercepts on Chura, which is really shaping up as an underground mineable ore body long term. in itself. It's probably got about 90,000 ounces just in that one lode in the resource. Really regular high-grade intercepts there in a nice tight structure. We're still drilling at very shallow level by Goldfield standards. So that's zooming back out to the full resource. You'll see here all of the steep lodes come on. The southern part of the deposit's dominated by steep lodes. In the north, we've got a couple of key ones, real good quality ones. And then this will show here a near-surface stockwork zone. That's only 2 metres below the lake bed. So we're talking transported cover, blind deposit, but not deep. That's all the steep flat lodes there, which account for about 25% of the resource, and we've got 10% of it in west dipping lodes. I should have mentioned about 50% of the contained gold's in those steep lodes. This is our block model. We don't expect these structural patterns to end at the limit of our drilling. We expect the deposit to keep on going, so there's growth potential at Bombora. There's also massive growth potential within that entire anomaly, which we haven't really drilled at all for 2 years. So what Tom mentioned up the north end, there's a new discovery in the last few months called Crescent, which we've drilled some more. We haven't drilled the Bombora South area at all for about 2 years, and we'll be look forward to getting back into that exploration side of it. So hopefully you can see there's multiple areas there to continue to grow the resource and the project.
Thanks, Mike. We've spent $20 million out here. It's cost us, for every $18, we've generated an ounce of gold. In the last 5 months, that's come down to $13. What this shows you is the ounces per vertical metre with depth increasing to the right, a grade in the red graph. It's showing around about 5,000 to 6,000 metres above 150, and around about 150 it seems to drop off. But if you keep that in mind, that is simply due to drill density. That 150 metre vertical depth corresponds to that dashed line that you can see on this long section. Here we're looking at the ore deposit side on, looking to the west. You can see very limited drilling below that. It is drill constrained. It is still growing. That's what's so exciting about it. In context with other, some underground mines in the area, the key message here is that we're only scratching the surface, but we are seeing scope for a standalone open pit development based on the shallow part of the first 2 kilometres of an 8 kilometre system sitting with a 550 square kilometre gold project. This is why we're confident this is going to go underground. A good, consistent grade that hangs together, as you saw in Mike's fly through, in 3 dimensions, and therefore can be mined underground. This is a separate lode. Similar theme. An important de-risking element is the metallurgy. Obviously, what we're seeing is something not too hard with excellent recovery, high gravity gold. What doesn't get collected by the gravity gets leached out very quickly with minimal chemical additive. That translates to cheap processing cost. Shallow ounces, 800 in the top 150, translates to cheap mining cost. The ability to go underground gives us longevity that will slowly unwind and add value in the long term. So these things are very rare. I certainly am not aware of any of them. 3 to 4 rigs will guarantee strong news flow, an increase in resource based on the pattern. It is difficult to drill 160,000 metres anywhere and have things get better. And I think that pattern will simply continue. So the mineability is underpinned by the whole high gold endowment, extensive de-risking, again, minimum downside, camp scale upside equals multiples as a potential investment. So thank you very much for your time.